Ooh. Hey everybody, I've got Lior Gantz with me, and we are going to touch on everything inflation, real estate, hyperinflation, and the biggest black swan of all, Taiwan, what this could mean for us. Thanks for coming on the show, Lior.
Thank you for having me back.
Absolutely. Now, before we get started, I want to tell everybody there's a free download for the gold thesis, how gold and precious metals could absolutely beat the market. So it'll be in the description. I'll pin it in the comments. Anybody that's interested, it's free. Check it out. And where do you want to start? Which one of these? I really want to get your take on real estate and how the interest rates are going to affect that because, I'm in real estate. I know you're invested in real estate. I have been getting out as I see everything kind of getting worse because I would like to get a better grip when prices dip. Does that make sense?
Yes. I think we should start with interest rates because I think that's the biggest topic of them all because it impacts everything. So if you want to, I can touch a little bit more on real estate. I think that's the number one talking point.
Give
Um,
give me the fire hose, man. I want to get your take on it.
yeah, actually, if you look at my name, I don't know if the audience can look at wealthresearchgroup.com/ZERP. ZERP is acronym for Zero Interest Rate Policies, and I've been doing a few interviews in the last like 2-3 weeks, and I've been saying the same thing. The end of zero interest rates is upon us. We are not going back to zero interest rates in the Western world for many, many, many years, and people because for the most part, people have been thinking about 2008 till today. They think that the Fed only has the zero interest rate environment to work with. They think it's a constant. It is not a constant. It was an anomaly. It was a 14-year long anomaly, and it didn't end orderly. It ended with inflation bursting. All that potential burst. So do I blame the Fed for this? No. Do I blame the government? No. There's a whole confluence of things that are responsible. Bottom line, when you look at these surveys on Wall Street, they all say, "Hey, the Fed's going to raise, get to this magical point, and then it's going to cut, and that's not what's going to transpire. We have finished this experiment of zero interest rate policies. And I will briefly touch on this because I know we have a short interview. But if you want like the full analysis, the whole scope of information, check that report out at wealthresearch.com/ZERP. But let me give you a few of the most important takes. One, we are at the end of TINA. TINA is an acronym for there is no alternative, meaning that for the past 10 to 12 years, fund managers would not have, and clients would not have any money in the bank. They would funnel money into investments because the banks would give them no interest and bonds would give them no interest. And so they went to either real estate or stocks, and it created this bull market in both of them where the P ratios expanded because how much are you going to pay for a business when there is no other alternative? A lot, right? And we're compressing that back down. The best example I can give of that is my hedge fund manager called me a few days ago, and he said, just so you understand, Lior, what the end of TINA means, I can now call my broker and get some shares of American Airlines for our fund, or I can lend American Airlines money at 12%. I now have two alternatives, and that's the difference in today's world. Now you have the ability to buy bonds and stocks, and obviously, for the past 12 years, people have mostly just been buying stocks. That's why you see a lot of selling in stocks and this transition back to bonds. That's one thing I think is happening. Secondly, I think in real estate, you're seeing a lot of uncertainty. I can illustrate that with a real life example. A fund manager called me a few days ago and said, look, Here's what's happening in Manhattan. If I want to sell a property now, the buyer cannot get 75% loan from the bank. He can only get 50. So he needs to come up with way more cash than before. Obviously, that means he wants a lower price. Secondly, the bank has raised the interest rates to a point where if he wants to make money after adjusting for inflation, he needs the price to be very low. So there's two main big things pressing down prices. So I said, okay, well, what do you want from me? He said, 6 years ago, we bought a building that is now fully rented. We renovated the whole thing. It's cash flowing. Everything's great. My original investors from 2016 won out. Would you be able to buy a piece of the equity? And I said, sure, I will buy it for what the original investor paid in 2016 minus 50%. In other words, I want the price of 2016 real estate in Manhattan cut in half for me to get in. He calls me a few hours later. He says, done.
Wow.
So there's real distress out there. There's uncertainty. I think what the Fed has not done well is it's not communicated when this all ends. And that's the problem. There's uncertainty in the markets on how much more they're going to raise and how fast and how aggressive. If they would have come out and said, hey, we are going to 5%, that would be great. Everyone can start thinking, okay, where do I want my portfolio at 5% interest rates? Where do I want this? It's easy, right? You can start thinking. You don't know where they're going. You don't know how fast they're going there. It creates all this uncertainty, and everyone's just frozen. Like, should I buy? Should I sell? Like every investor I talk to, he's like, well, maybe we're going to this epic bull market, but maybe it's a bull trap. Like nobody knows. Nobody knows. We're in such a freeze moment because what the Fed is saying is that they're data dependent, meaning they get data, then they make a decision. They don't have a strategy that's set in stone and or that's very concrete. They're just very data dependent, and that's the problem. And that's why the markets freaked out a few days ago, because the CPI came in hot, and then everyone's like, okay, well, what's the Fed going to do? I'll just sell stocks, and then I'll think about it. Sell first, ask questions later. And that's what's happening right now. So if you're asking me, what's the biggest thing that's putting a lot of weight on prices, it's interest rates. And whoever thinks that the Fed is gonna squash inflation with raising interest rates, it's not gonna happen. There are very inflationary forces in our economy right now. They're not going away unless the Fed does what Paul Volcker did, and I don't think that that's what the Fed is going to do. So, in my opinion, in my analysis, and you can read the full report, wealthresearchgroup.com/ZERP. We're going to 4 or 5, probably 4 on the Fed funds rate, and we're going to stay there for years. We are not going back to zero interest rates.
What if that doesn't cure inflation? Then we're going to go up.
It's not going to cure inflation. What's going to cure inflation is the free markets. The free markets are very efficient.
Yeah, we used to have free market. Now we've got crony capitalism.
Yeah, well, the crony capitalism will fix it. Whatever you want to call it. We're definitely not in the wild, wild west, pure capitalism days of America. That's for sure. Just regulations, government, the whole thing. We live in the same world. I'm not. When I say capitalism, I mean
there's a
me,
few,
and the other 300 million people in America with the entrepreneurs, business leaders. They at the end of the day, we all want the same thing, right? We get up in the morning, we want to make money, and in order to make money, we need to make a profit. In order to make a profit, we need our prices at some level, and we need to get the products at price A and sell them for A plus something, or same thing with services. We need prices to compress. We need to be more efficient. And right now, because of what happened in 2020 and in 2021 and 2022 in terms of like closing down the entire world, you know, I know you think about these things, but you know, in March 2020, 4 billion people were sitting at home doing nothing. That's unbelievable to even think about that, like a global quarantine. And then you open things back up. It creates all these problems, and we're going through all these supply chain problems. Couple that with the problems in the energy sector in Europe and otherwise, we are in a real big reset of the global economy and how things move around: products, services, capital, human labor, ideas, and such. Once we get over this reset period, we'll be in the new economy, and I think the new economy for the next few years is very inflationary. I don't think that the Fed can stop inflation, but I think it can, coupled with what efficiencies in the markets will do, I think we can get to a point where the CPI, not shadow stats or anything like that, but the CPI remains in a range between 3 and 5 for the rest of this decade. And that's where I think we will be.
I guess they could manipulate it however they wanted to. The CPI is a big fat lie. I mean, it's not,
they
that is
can.
not the right inflation. Not at all.
Correct.
Everything I
That's,
buy has up 40% at least. And it's, so I guess they could cherry pick a few more basket of goods to keep it at 4, but I'm on the fence. I think they might chicken out and go backwards. I think they might pivot.
you
But
know, anything's
nobody
possible.
knows.
Exactly. Anything's possible. I think in general, history is to the side of America prevailing. America is a very, very robust country with exceptional entrepreneurs, the best businesses in the world, with all of its problems and all of the debt and everything else. At the end of the day, it is the powerhouse of the global economy. That's not changing anytime soon. America is number one for most things that have to do with businesses, innovation, entrepreneurship, and they will weather the storm. It's just a matter of what sort of victims will transpire from this. Is it going to be a lot of victims, so the hard landing, or is it going to be softer, or where is it, how long it will take, etc. But the main demographic and the main trends are inflationary. 3 to 5%, just so I get everyone on the same page here, on the CPI for nearly a decade. So from 2022 about 2029, 7 years of 3 to 5% on the CPI, and you're talking about a real loss of purchasing power of in the order of 30 to 40% on the dollar. That is insane. So just so we're on the same page, I am predicting something very inflationary. 30 to 40% on your purchasing power as a saver in 7 years is extraordinary for a country like America.
And wages are not going to keep up either. I mean, so you've got higher interest rates, you've got wages not keeping up with inflation, right? Correct. So it's like a stagflation environment where everything's just kind of crappy, right? Is that?
Yes.
And you see this for 6 or 7 years, 10 years, we don't really know.
I see the big distress for the next 12 to 18 months. The big distress, what we're feeling right now. We're sitting here, the markets are crapping like, minus 5% on the NASDAQ. That's, things that we don't see unless it's a 2008 or a 2000. But we're not in a situation where we crash down and then the Fed immediately reacts. We're not in that situation. The Fed doesn't have the popularity or the political capital behind it to start saying, hey, we're accommodating, we're turning dovish here, we're going to prop up the economy. No, because of inflation, being a dove is not popular they will get their heads chopped by Washington if they even start talking about, hey, let's lower interest rates back to zero and prop up the economy. No, what the Fed is saying and what Washington is saying is, hey, the economy is very, very strong in terms of the employment side. This is not a classic recession we're going through. We are going through a different sort of scenario because we closed down the entire world. Now we're opening it back up. It's creating all sorts of imbalances. Then you have a war in Europe. We need to handle this a little bit differently than a classical recession. And I think that in this, whatever you want to call this, I just call it a generational reset. I think it will last another 12 to 18 months. On the other side of it, the new economy, basically the same thing we had in 2011, where we went over this period between 2009 and 2011, where there was a lot of distress. People thought that 5 countries in Europe are going to go bankrupt. There was a lot of problems. But then after all these problems got resolved, or the can was kicked down the road, we got to this new economy in 2011, early 2012, and then we embarked on that economy for 8 years until the pandemic happened. So I think that's what we're going to go through. We're going to go through this churning like a birth of a new child, right? You're in labor, you're in pain, and it can some labors take 5 minutes, some need operations, some need this. On the other side, there's a baby. And that's what we're going to get. We're going to get a new economy, and that new economy, I think, will be more inflationary than in the previous decade. It's going to have higher interest rates than the previous decade, and it's going to be a new normal, basically a new world. We're changing in terms of how we get our energy. We're changing in terms of how we work with hybrid workforce, and people way more flexible. And throughout this period between 2022 and 2029, you're going to have an entire generation of millennials getting married and forming families, and basically a new baby boom in America. So there's big things happening. I think right now we're at the eye of the storm. A lot of people are going to be freaking out, losing their patience, doing a lot of impatient things. If you can weather this, on the other side is a very good economy, but different than the one we had in the last 10 years.
I agree. It's if you can not be part of the problem, you'll have the opportunity to be a part of the solution when we come out of this thing. You mentioned earlier real estate, the volatility is getting priced in the market already. The higher interest rates coming, people are looking forward, and you got in on a great deal already, it sounds like.
I hope so.
Well, yeah. And then we talked about it. Inflation, the next many years, however it is, nobody knows, is going to be an inflationary environment. Have you ever seen a better time to hold physical precious metals?
I think right now is very much like 2009 to 2011 in reverse. If you remember 2009 to 2011, there was a reflation trade. Everyone was buying precious metals. Everyone. Gold went from 800 to 1900. Silver went from 9 to 49 because everyone was like, this is quantitative easing. They're printing. They're going to print this into hyperinflation, 40% inflation. I remember I was watching all of this happening because I was buying silver myself, physical silver at like 15 and 20 an ounce. And I was like listening to this every day. I'm like, man, this is going to, okay. 2011 comes. Luckily for me, I sold silver to fund my honeymoon. So I sold it like 42, 43, 44.
Oh,
I was
wow.
out of everything.
That's good, man.
I was lucky. Yeah, I was lucky. It turned into hotel rooms. So, but this is in reverse. Now everyone's like, no, the Fed is going to crash us down. It's going to crash us down. So everyone's selling their gold, selling their silver. I'm not talking about physical. I'm talking about COMEX.
Paper.
Yes, paper.
Derivatives.
Everyone's getting out of this. Everyone's like, this is going to be a recession. They're not reflating, they're deflating. The prices are going to collapse for commodities. And just like then, but in reverse, once people get over this panic, they're going to realize that the Fed cannot fix the real trends in motion that are inflationary. And just like in reverse in 2011, silver peaked at 49 and then went down to 12 in 2015. This is going to be in reverse. Silver is going to bottom, who knows, maybe 12. And then on the flip side of this, for the rest of for the next few years, it's going to go up. And I think, this is just my opinion, it's going to break its previous nominal all-time high of 50, and it's going to go above that, probably towards the 55 to 60. And that's just because I think gold is going to around 2,500, and I think that we will see a ratio of about 50-1 when the cycle matures. So that's how I'm basing that. But I have all this data and insights and everything on wealthresearchgroup.com/11, so you can check those out as well.
I think you're absolutely right. You're absolutely right. You nailed it. That's exactly what I think is going to happen.
That's a rare one.
I also think that when silver gets going this time, there's so much more liquidity out there. There's no telling where it'll stop. People, I saw this when crypto was going up. People buy things that are going up. It doesn't matter if it's dog coin. It doesn't matter. And when silver goes up, I have people ask me, who's going to buy $100 piece of silver? The same person that bought dog coin. It doesn't matter. If it's going up, they're going to buy. So there's no telling. There's no telling where silver will stop. And right now it's getting beat up. And I'm sure you'll agree with me on this. The best time to buy anything is when it's coming down, when people have lost their faith in it. They've been holding it for a while and it just keeps going down. And that's usually when it turns. When it really gets bad, it always does that first. It always comes down right before, and when everybody's good and talked out of it.
Yeah, I will say what you said. I agree with what you said with one asterisk. Just one asterisk, okay? Yes, the best time to buy is when things are on a discount. Little asterisk, unless you are already fully positioned. Do not just go all in on any asset class. If you already bought the dip and you feel like you're already fully invested, and buying more will put pressure on you in other regards, don't do it.
I agree with you 100%. Again, man, that people have never put 100% of your wealth in anything. You will lose 100% of the time. It doesn't work like that. You have a certain amount you've decided to allocate, and that's what you do. So, and as you make more wealth and create more wealth from the businesses you have that pay you to own them or whatever it is, you can allocate that percentage as it goes down,
Yes.
And sometimes I'll wait. I don't buy every 2 weeks like some people. I don't dollar cost average. I like to buy the pullbacks. But as it's coming down, I will buy more and more because I'm horrible at picking the bottom. Absolutely, I'm the worst, actually.
Well, if you're into physical, then the only thing that should be on your mind is how much physical do you want to own. For me, it's my thought process was I want to own enough physical precious metals, 80% gold, 20% silver, enough for me to sell them if I need to fund 24 months worth of my living expenses as a family unit. In other words, if there's a 2-year depression and I need to fund my lifestyle for 24 months, then I have enough gold and silver to do it. As a thought process, let's say my family spends $5,000 a month. That means $120,000 worth of precious metals in physical form need to be stored. If I am, at $10,000, then $240,000, et cetera, et cetera.
Sure.
That is basically the essence of my physical position in gold and silver.
Okay, I'd like to move on to energy. We are in a freaking energy crisis. The whole world is. These green weenies want everybody to buy electric, this, that, and the other, and they somehow or another they think we're going to get off of oil, which is not going to happen anytime soon.
No, no, no.
And they're listening to, I can't remember, Greta. How
Yeah, yeah,
dare you?
yeah. Yes, the
And
Swedish
now they're
girl.
going to freeze to death over there in
Yeah,
Europe. So give me your look at energy, because this is really, really a big deal. And I mean energy in every form. If you're going to move something, including your person, your body, it takes food as an energy that's going up every day.
yeah,
Fuel, oil, natural gas, all these things are going up. So
yeah.
where do we go from here? And what is your take on that?
Well, first, I think something that you're going to find very interesting. The former CEO of Exxon did a very interesting piece on projections of where oil consumption is going to be in 2050. And their analysis, which is by far the best, said that 2050 oil consumption will be same as in 2013. So oil is not going away. America's right now is about 5% of the global population. And just remember, in between now and 2050, the fastest growing continent is Africa. They don't care about green. They don't care about a clean planet. They care about getting their people urbanized, and that's going to require oil, natural gas, and that's what they're going to do. Same with China and India and all these countries that are growing way faster than the Western world. Politically, their agendas are different than the Western world, and you can bet that oil will be pumped out of the ground in 2050, and a lot of it is going to be needed to get all these people that are moving into the middle class around the world to supply for their daily uses. So that's one thing. I think that debate is kind of over if you really look at the facts and understand the big picture. Oil, natural gas, etc. If you want to move away from oil and into green, it's probably a 100 to 200 year process, and it's going to be requiring a lot of natural gases in the intermediary period. I think that what Europe is going through right now is a problem that in the late 60s, in order to bridge West and East Germany, East Germany, which was then ruled by the U.S., influenced by the USSR, struck deals with the West, and they all relied on Russian oil in the form of pipelines. So throughout Europe, from Siberia to Western Europe, there are pipelines of Russian oil and natural gas. The problem was in 1991 when the USSR broke. Now those pipelines are going through 4 or 5 different sovereign countries because they're going from Russia to the Ukraine to Romania, etc. So now those pipelines need to get approval from 3 different prime ministers. And that's when that problem that you're seeing today, that war started in 1991, basically. That problem originated in 1991. The problem is that Russia doesn't have deep seaports, and they can't use ships to bring oil to Europe. They had to use only pipelines. And now those pipelines are a huge political problem because you cannot transport oil from Russia to Ukraine and into Europe. That's not possible. And so Germany predominantly, but many other European countries are now facing the issue of how can I diversify my oil consumption from other sources. And that's going to take a lot of time. This is not like a quick fix. For now, Russia is basically selling to a third party, and that third party is selling to Germany. So basically, Russian oil is getting to Germany, but for political purposes, it's just going through a third-party broker. So it doesn't look to the German people that they're funding the war, but they are out of necessity. So in general, this energy crisis in Europe is one thing. It's going to probably take 5 to 10 years to really get to the other end of it. And then the bigger problem is that no country, no prime minister wants to be dependent anymore on other countries for his sources of energy. Because no prime minister wants to stand in front of his country and say, hey, I relied on country A, but they chose to sell to China over us. So now we're stuck. So all these prime ministers are now looking to create alliances with countries that they can depend on, which means we are no longer in a purely capitalism type energy market. A pure capitalism energy market is I'm going to buy from the cheapest source. What we are right now is in a geopolitical energy market, and that means I want to buy from the most reliable source. And that means you're going to pay higher prices. So higher energy prices are here to stay because there's no trust anymore. Trust is the number one way to lower cost around the world. When you don't have trust, you need to go to a person that's going to be more trustworthy, but more expensive. Also, if you want to use your own sources, obviously, drilling for oil in America, where labor is more expensive and there's way more regulation, is going to be more expensive than doing it in places where regulations are very relaxed. So I think that energy is going to keep being a problem Americans have not faced since the 70s. I think they will continue to see spikes and then it will come down. But you will talk about inflation on this show a year from now and 2 years from now. You will still be complaining about problems with gasoline prices, food prices, etc. Maybe not to the tune that they are right now, but it will still be something you think about. Inflation is back as a problem in the Western world, something that has not been around for many, many decades. So I think that's where I am at with food inflation and energy inflation.
Yeah, and we have an infrastructure problem here with our natural gas and oil as well. I don't know if you know this, but I've been in natural gas business for 14 years, hooking up these Haynesville shale wells, and the pipelines are full. We have an infrastructure problem. You can punch all the holes in the ground you want to, but if you
Yes.
can't sell the fuel or the gas,
Mm-hmm.
you've got real trouble.
Mm-hmm.
So, and it goes back to the people that are running this country. You know,
Correct.
it's aggravating, and I don't doubt it one bit that I'll be talking about inflation until my whole beard's gray. Okay, there's the biggest black swan to me is Taiwan.
Mm-hmm.
And I have been talking about it, and China could whip us by doing nothing. All they got to do is do what they're going to probably attempt one day, is to take Taiwan. I'm not sure how we're going to do that. And I know you talk about the weakest link over there and where WW3 could possibly start.
You've been listening to my interviews, huh?
Yeah, I did. One of them
Interesting.
right before we
Okay.
started. Yeah. Well, I wanted
Okay.
to, because I like what you have to say. And Malacca
Correct.
is the weak
Wow.
link. And I haven't heard about this. So I want you to really fill me in on that.
Okay. Absolutely. So, as I always do, I like to give out reports so people can just sit at their own time and learn this. Wealthresearchgroup.com/Taiwan is a report about Taiwan 20% and 80% about what you just said, this keyword Malacca. Because if you look at WW1, WW2, in major conflicts, China, if you want to simulate, and believe me, I'm from Israel, like we know war. If you want to simulate how China is going to invade Taiwan, it's more ambitious than Germany invading the UK in WW2. It's virtually impossible. That's not what they're going to do. China is not going to invade Taiwan unless it's the last resort. Okay, there's many other things that they will do before that to apply pressure on Taiwan. Where the U.S. can apply pressure on China is through this narrow strait, a corridor, where China gets basically I think about between 2/3 and 3/4 of their ships go out of that little strait, and that strait is a U.S. ally. This is not a new problem for China. They've been debating it since the early 2000s on how to diversify out of those shipping routes. They have still not solved that problem 22 years later. So there are chokeholds in the South China Sea where America can apply a lot of pressure on China. And as you know, China is an exporting country. They rely on those exports. If those are a problem, China's in trouble. Both countries, the US and China, have vested interest in nothing happening to Taiwan. So I think the main island of Taiwan is not where we're going to see trouble. If China is going to make something aggressive, they're going to probably invade one of those islands that Taiwan controls, but are very sparsely populated. So they're very easy to occupy. They're way closer to mainland China than the main island, and they're smaller. Those are more doable if they want to make a statement. If they want to show like, hey, our military can do this, then I think they will go for the smaller island that are either not populated at all or just very sparsely populated. The Chinese, basically, their strategy is to build artificial islands in the South China Sea and to try to break up the enormous amount of U.S. allies that are everywhere from north to south, right outside of that those shipping routes.
Those islands are very elaborate. I mean, they're war harbors. I mean, they're
yes.
I can't remember the name of them right now, but anyway, go ahead. That's probably the biggest thing that people don't, so China, Brazil, India, they're all starting to create their own currency as China is looking at Taiwan, and they say, make no mistake about it, you belong to us.
Sure.
They're going to do that. I mean, those people, and it doesn't matter if it takes him 10 years or 100.
Doesn't matter.
Yeah, they're playing chess, and I hope we're not playing checkers, because I think it's going to be sooner than later. But anyway, keep going.
I think two things are important here. One is whether or not China is going to be aggressive to Australia. If China is going to be aggressive to Australia, Australia is going to call Washington, and they'll need help. So watch Australia and watch Australian relations with China. If those become tensionous, that's a problem. That's a real big problem. So that's one thing I wanted to kind of mention regarding Taiwan, Malacca, and Australia, because people don't always connect those dots. But Australia is important enough to the U.S. that they'll intervene, and that might spark a lot of problems. With regards to this other idea that you brought up, the BRIC countries versus the West, many times they ask me on interviews what I think about the expiry date of the dollar as a reserve currency, and I say it may never expire, but it might find another second reserve currency. In other words, I think we're moving into a world where the dollar is going to remain the reserve currency for many countries that are allies of the West, and China is going to create a situation that's beneficial for a lot of countries that do a lot of business with them and want to align with them to trade in the yuan. And you will have basically two reserve currencies in tandem with some sort of an intermediary conversion between them that might even be fixed. We may be transitioning into a world of two blocks and two reserve currencies.
I can believe that. This is important because that's how we've been able to screw over the whole world, is by printing money, because MMT, the Fed thinks they can print all the money they want and there's no repercussions. And we're starting to see the repercussions of that.
Oh, yeah.
And I guess one more thing, and I got to go, and I know you do too. As these and Jerome Powell come out and said it's not uncommon to have two reserve currencies. Well, it is in my lifetime.
Sure.
As this rolls out and the whole world knows, we have a strong dollar, which sounds great, but it's not. We're ripping off other countries with our strong dollar.
Mm-hmm.
What happens when they say, no, we're going to go with a gold backed digital yuan? We'll just spend our dollars here in the US and they come over here and buy whatever they want. I think, what do you think what could that do to asset prices? Do you think that's a possibility? Uh,
Um,
Kind of the
n-
dollar
n-
milkshake theory, but not.
yeah, I think in terms of how many ounces of gold China has right now to back the yuan, it's not nearly enough for them to introduce that kind of idea. They'll be laughed at. I think that what they should do is, first of all, bring their economy up to Western standards. The reason that people intuitively go to the dollar is because there's no question that the rule of law in the United States and property rights in the United States are the best in human history. No other country has ever put on a pedestal the rights of the individual like the U.S. has. And no country is perfect, and obviously Americans are very self criticized. They like to criticize their own government, and I understand that. That's what makes America actually a great country, and that's why there's a lot of checks and balances in America. China, their government wakes up one day and just devalues the currency. That's unacceptable in the West. So the first thing they need to do is bring their currency up to Western standards in terms of its stability and the trust level that you would have. Because if I ask you tomorrow, or if I ask you now, like, where would you put all your savings, the dollar or the yuan? I'm assuming you'll say the dollar.
I'd
Way
say
before you.
gold.
Yeah, no, I know. But if I
Yeah,
give you the
I got it.
yes, so that's one thing. I think that we are moving into that sort of world. Um, the United States is still by far the largest economy in terms of its GDP. It is true that if you measure GDP in different ways, China is already the biggest economy in the world. But in terms of the way that the U.S. is structured, geographically, and from every angle, it's going to continue to be a beast, and it's going to continue to be a very, very strong economy and a strong country and a very wealthy country, as long as they don't screw it up.
Well,
And I think,
hang on. What is
yeah,
the repercussions
hmm
for these countries doing business outside the dollar? Harry Kissinger went over there to the Saudi kingdom in 1974 and said, hey, we'll protect you if you use our currency. That's pretty much
yeah,
where it gets its strength from. That's
yeah,
petrodollar. That's concreted the dollar in. What
hmm
happens when these other countries are going around? They're already doing it. I can't see that not having any repercussions. It seems like
no,
it's
for sure. We've seen, look, since the introduction of the euro, the dollar went from 62% of global currency in circulation to, I think, today around 51. So it's having a real impact. It's just that the yuan is around 2% of currency in circulation. So yeah, the dollar is 52%, the yuan is 2. There's
but
there's a
we're not
long,
talking about yuan. We're talking about India, Brazil, South Africa, China.
even more negligent right now.
But they're
The trend is definitely what you're saying. The world is moving east. There's no
right,
debate. It's just we're debating the pace. And what I'm saying is you don't have to
right.
freak out today. These are processes that you will see from miles away. They're slow, as you can see. Like, we went off the gold standard 51 years ago, and we're still here. You know
I
what I mean?
know.
Like
People have been
it's
holding precious metals since 71, man. They've been
correct.
bracing for this for their whole life. And
Yes.
I get it.
So I'm saying that it's the pace that matters. So that's the only thing I'm saying is the trajectory is definitely we're in agreement. The world is moving east. There's
Yeah,
no doubt.
I
There's
agree
no
with you,
doubt.
man. I agree with you
Uh,
100% on most everything.
yeah, there's no doubt. I think that if you're scared about the dollar, what I said 20 minutes ago should scare you enough. Losing 30 to 40% of your real purchasing power in 7 years is a lot. Is a
Yeah.
lot. Okay? It's a
Well,
lot.
what it's
So
going to do to people's living, their standard of living is really going to crush them. Everybody likes to have this much more than what they can afford, and that's about to get like this.
yeah.
Interest rates going up, and it's going to be really sad to watch people that have no hedge. That I talk gold and silver all the time, and people are waking up every day. Every day, people are buying silver, buying gold, buying new first timers. You know, and it's wild to watch, and then people are buying it as it's going down. I think it's so cool to see that because most of the time people like to wait till it goes up to buy it for some reason. But that's it, man. Is there anything you'd like to add? One more time, if anybody would like to learn more about anything we've talked about, go to wealthresearchgroup.com/ZERP. Lior does a great job putting that stuff together. His reports are very thorough, and you can tell he's a wealth of knowledge. I appreciate you coming on, bud.
Thank you very much. Thank you for the kind words.
Absolutely. Have a great day.
Thank you.